Well, hello and welcome back, everyone, to another Market Conversations. I'm Jerry Hall, and I am absolutely pleased to have two of my favorite YouTubers joining me for tonight's discussion. Now, one of the things I have found so very interesting along my journey in the world of investing, and especially as I dove into the cryptocurrency space, where there is a tremendous amount of information, right? Tons of YouTubers, tons of blogs, tons of articles, and sometimes, well, not sometimes, most times, all those sources are presenting a specific point of view. Some may be extremely important and valuable, and some may be, geared towards an agenda that may not be in your best interest. So tonight's discussion about outsourcing your financial future and becoming your own financial advisor is really about understanding the opposing view to whatever narrative you're buying into for your investment ideas. We're going to cover a couple of spaces tonight. We're going to cover commercial real estate. We're going to cover Wall Street products like mutual funds and ETFs. We're going to talk about crypto, Bitcoin, XRP, the things that are in the news every day, in our minds every day as investors. Now, to help me do that, of course, I said I had two of my favorite YouTubers on, probably my two favorite YouTubers. That's right, Jungle Inc. and Nick Black are joining me here tonight. Hey, guys, how are you?
Hey, thank you for having me, Jerry.
Oh, it's a pleasure. I see, one of the lucky things I have in my little arsenal is I have you both on speed dial on my phone, and I can reach out to you guys anytime I have something that I want to run by somebody that I hold in high regard. And I've done that with both of you over the years. But here we are in a public forum, and this Charlie Munger statement, now I'm just going to paraphrase it, but Charlie Munger came out with this very publicly and said, in his mind, it was as important or more important to understand the opposing view to any investment concept or idea he was about to implement. And so having you two guys on tonight, I thought, let's each take a pro, and then the other two will talk about the cons for these three particular, concepts or ideas. So let's start with commercial real estate. And I think, Nick, why don't you present the pro case for investment in commercial real estate? What that pro narrative might be, what people might be hearing.
So I'm going to reduce it to a simpleton, because I'm a simpleton. I think there's a little simpleton in all of us. The idea behind commercial real estate is obviously if the gears of the economy are turning and there's a broad expansion in the money supply, or there is various forms of credit and cash availability being dispersed throughout, and hopefully wages track inflation, and the good kind of inflation, right, of an expansionary economy. Then you have a lot of investment, and essentially you have a lot of pull forward, right? So you have a lot of companies saying, okay, where is the hockey puck going to be in 6 months, 12 months, 18 months, 3 years? Because a lot of these commercial projects, they may take 36 months from bang to bullets. So you really are looking way out, along the curve. But if you think you're in that expansionary, or you think you're about to get to that point where the economy is about to expand and these things are going to happen, then you immediately dive into, okay, where is my next, second, third, fifth location going to be? How can I snatch up that real estate, and how can I monetize it in the short term? So I'll give you an example. Elliot Fitzgerald, which was Hillside Developments. Yes, later on he went to prison, but before that, he was a genius at commercial real estate. And what he did was he would buy a piece of property in the path of progress, right? He would look where the city was going, or he would look where the expansion was going. He would buy a piece of property that was commercial. He would cut it in a variety of ways, and he would essentially go and re-permit it to part commercial, part residential. He would then change the density of the residential. So so imagine you got a square piece of property, you cut it in half commercial, half residential. You take the residential, you now cut it up into 4 pieces. You then go back and cut it up into 8 pieces or 16 pieces. when you change that density, the commercial becomes much more valuable. He would then sell the residential before it's even developed for fully financing on the commercial side, right? Because then you could put gas stations and little shops and all this kind of stuff. So that's just one example of how people can be incredibly creative when you're in a market that might be expanding, or when you have some credit availability and you can expand. And because you can put so little down, depending on how your financing works and the relationships you might have with banks, you can take, as little as 5%, you can get a commercial project started. You can also get a lot of other people to jump in on the bandwagon with you. So a lot of times your sweat equity is your investment, and other people come in with money and they look at your business plan and they say, wow, this makes a lot of sense. So if you really know what you're doing, or you're incredibly inspired or innovative or just a freaking genius, you can spend no money and you can develop a project and you can have everyone else come in. And now you turn your sweat and your ingenuity into actual equity. And at the other end of that, 36 or 48 months out, there's a nice little pot of gold at the end of that rainbow.
Beautiful, well-stated case in favor of commercial real estate. Jungle, do you want to kick the con off for what cons you might see in the commercial real estate space?
Well, I think Nick kind of brought it up in the midst there. He was talking about, a genius investor that was able to get out in front of things and see where this economy may be going. Someone like Nick himself would do very well at something like that. But a simpleton like myself, I feel like I'm not able to see where this space is going. Or commercial real estate going to be less in demand, people working more from home, things of this nature. I think there's extra risks out there where you're not careful, you could get burned here a little bit. And again, with a commercial real estate tenant, it's not always so easy to replace them quickly. So I think there are some extra risks there for the just general person like myself that may not be able to gauge the landscape and say, hey, this is really where the demand's going to be. I may get it wrong and get where the demand is fleeing. And I think that's where, especially today, there's probably a little more risk than there has been in the past. Again, you could go out in the past and, get a bank and just get paid your monthly rents, and it's tax favorable and you can leverage the property. But I think a lot of those kind of deals are not going to return you a very good return anymore. And again, I think the play is what Nick was talking about, if you are smart enough to go out and do that. But things are changing quickly, so it would be a concern for myself.
Well, I'll tell you, when I think about real estate, I'm thinking about any kind of income producing real estate, whether it be residential, whether it be commercial, or even industrial. The thing about real estate is that, yes, historically, real estate has had incredible appreciation rates, and all that is still holds true. But what isn't talked about, and I think it's one of the most important issues when you're looking at any kind of real estate, other than the purpose of buying a home for you to live in, right? Your domicile, your safe place. If we're talking about it as an investment, there's so many impairments that people don't discuss. Let's talk about those for a minute. Let's talk about jurisdictional taxation, right? We've got a 30, 40-year history, at least in the United States, and I don't think Europe is that far behind, or any of the other developed nations, that their deficit spending continues to increase. And if anything we've learned over the last 2 years, that's only ramping up. Well, if any entity, whether it be a city, a county, a state, or even the federal, they don't have any recourse to cover, except, well, I guess the Fed can print money or print value, but states, counties, and cities can't. Taxation is the only way, whether it be sales tax or property tax. Property tax is an impairment. Then you have the whole conundrum that we're all becoming very aware of, and that is the devaluation of the dollar. Well, if you look at how do rents get paid? Rents get paid by businesses and people. If their wages and revenue streams are not increasing, how can you as the landlord increase your rent against offsetting increases in taxation, repair costs, etc.? It's a really tricky thing. And the last impairment that I see with real estate, it's not as liquid as you may think. What has crypto told us and showed us? The speed in which liquidity can occur and be passed between people. Real estate is not a fast moving asset. It's months, sometimes years. So just think about that and analyze that when you folks are considering taking maybe some of your crypto profits and directing it towards some traditional investment vehicle like an income property or commercial property. All right, let's see here. I guess I'm going to do the bull case I'll start with the bull case for Wall Street and mutual funds. Okay, bull case. Wall Street knows what they're doing around finance. And because I grew up in a world where I was not taught finance, I was not educated to become financially literate, it is very daunting to think about how am I going to manage money to make money? Well, for years and years and years, I was happy to outsource that to someone else, a professional who knew what they were doing. And it was fine and dandy, and returns did occur, but it wasn't until I found you guys that I started asking questions. So Wall Street's promise to me was, I'll handle it for you, Jerry. I'll take your 401k money. I'll take your Schwab money. And I'll make sure that you have a retirement. Who wants to jump in with the con against the con artist, Wall Street? Who wants to start that? Mike, you want to come in and then we'll have Nick follow you?
Yeah, let's do the simple thing. I mean, it's just going to be, it's a racket in many ways. Like you said, someone's going to be taking fees right off the top just for managing the various investments there within that mutual fund, each one of those companies. Also, you have managers that are pulling money off the top to, to fund their own pockets. And so in many ways, it's a racket that feeds cash to the top and takes it away from you. And it's just going to be hard in this current economic setup to overcome that. And so I think that would be the main issue. How are you going to be able to overcome those drawbacks, essentially?
Well said. Nick, you could go a lot of places with this, but one of the things I was hoping you would share with us, because you got a unique take on this, because you know the industry better than most of us. So many think that a Bitcoin ETF is going to be so incredible for the space. And I think you have a different view. And I'd really like if you could talk about Wall Street in general, but if you could make sure that we address this Nick Black spin on the Bitcoin ETF, I'd really appreciate that.
Okay, so real quick, just to kind of follow what Jungle was saying, because I think he's kind of right on the money. I would just add that from a kind of psychosocial perspective, intensity on the word psycho is that companies, no matter what their constituent parts are, those humans that work there and how nice they may be or endeavor to be, the corporate structure is that of a psychopath. It's a psychopathic organization that does anything they can legally or quasi-legally in order to maximize profits for shareholders. That's it. That's the rule. If Mark Zuckerberg has to murder 64 people to get my share price up on my Facebook, that's his job. Now, right, within reason, that's kind of a funny way of looking at it, but all corporate structures are like that. They're all basically pyramids where sociopaths and psychopaths, they might rise to the top. But even if you have a corporate structure with a lot of well-intending people, nice people, the corporation itself is a functional psychopath because it has to be. So when you have an environment like that, where everybody's job is to promote the best psychopath possible, right? The best version of your company possible. And everybody's looking to cheat within the rules, and everybody's looking to get as much, meat off of the whale. That tends to create an environment that's incredibly hard on anyone not well embedded in that structure. So you, as a shareholder, you're not in that structure. You're another means to an end for them, and you're the lowest tier of the capital stack. You are the very bottom, and senior note holders and then owners or initial equity stakeholders, they're at the very top. But you, me, us, we are not part of that. So unfortunately, owning equity is not really owning anything, and I think that's that's a big misconception. You have the passive indexation effect, which Mike Green has kind of screamed ad nauseum, and it's an important problem. As to the ETF issue with the Bitcoin ETF that everybody welcomes and ushers in, yes, I can't wait. This is going to be great. Nope, it's not. It's going to look great. It's going to be great for 18 or 24 months. And many of us here right now, it's going to be great for us, for our pocketbooks. It's going to be awful for Bitcoin. Because what it does, what ETFs tend to do, is they create all of these quasi-monies, quasi-Bitcoin. An example would be when ETFs came into the gold market. You went from an ounce of gold relative to shares of gold versus these weird quasi-gold through derivatives. Because in the derivative space, you have forwards, fast, future swaps, options contracts, and all these kind of, and then you have products that are wrapped around a lot of those derivative products. So what you end up having is all of this quasi gold.
Now, hang on, can we associate quasi with rehypothecation?
No.
Okay.
This is different.
It's different. Got it.
Think of this as you have $1 and then you photocopy it 500 times. And you just put a stamp on it that says, no, this is real. But it's not real. You're like, I'm looking at the original Bitcoin. What are these 500 claims against Bitcoin? And so what happens, because right now Bitcoin looks a lot like gold, it looks a lot like a commodity. And so for the way my brain looks at it is the ETFs as they've been applied against, because it's not just ETFs, right? It's not just your one-to-ones. It's your ETFs, your ETNs, your exchange traded notes. There's all these different, and those can go up to 3-to-1, 5-to-1. So, and then there's options against those. And then there's futures, forwards, fast. You can swap against, you can get default swaps against. I mean, it can get really crazy. And all of those are kind of derivative paper claims in Bitcoin's case against Bitcoin. So you'll have the 21 million Bitcoin minus the Bitcoin that's been lost. And then you'll have hundreds of millions, potentially 500 or 600 million paper synthetic Bitcoins that don't really exist, but they take up the space. And so everybody trades everything digitally anyway. And so the problem is in all that murk, it becomes less important to own the actual asset.
And now, did we already kind of see this in the crypto market when the CME group launched their quote unquote paper Bitcoin futures?
It was kind
when the futures weren't settled in actual Bitcoin.
Are you saying in 2017 when they first launched?
Yes, that's exactly what I'm saying.
Well, I think what we saw was that's the first time people could short. They could go the other direction. So you could actually short the asset. Remember, there was no way to short Bitcoin other than literally borrowing Bitcoin from somebody, from an exchange, selling it on another exchange and hoping to God that you get knocked in the process. That was a losing proposition, obviously, in 2017. But in the end of 2017, when CME and CBOE came out, that changed things because for the first time, people that wanted to short could short. And what you saw is
the point was they were both going futures long or time period short or leverage short based off of a paper contract where no physical Bitcoin need to be settled on either side, whether it was your short bet or your long futures bet.
Yeah, well, think about what had been happening on Bybit, Deribit, Binance, and some of these other exchanges. I guess I'm not even going to say the other exchange because I don't like Fried Chicken Man, so I'm not going to remark about his exchange. But when you have 100x or 125x leverage, you essentially have 100 or 125 claims against Bitcoin, depending on how big the position is. So one could, if one wanted, take 125. That means if the price moves 0.67 basis points, your entire position is liquidated. And so,
yay.
Yeah, yay. But for that brief moment when that contract exists, in a sense, mark to market, you have 125 extra Bitcoin floating out there.
Gotcha. All right. So let's see. The only thing that I don't think that was covered that I think is really important when people are thinking about the products that Wall Street is offering us today and in the future, I think it's important to mention GBTC. The fund itself has actually been wonderful for the space in that the structure of the fund is as shares get purchased and new shares get minted, it's only new shares getting minted after new Bitcoin has come into the fund. And it is a one-way street. Bitcoin goes into the fund and there's no mechanism for Bitcoin to come out of the fund and back into circulating supply to dilute your folks' circulating supply of Bitcoin that's out there being traded back and forth. I think when it's said and done, we will thank Barry Silbert for that mechanism, because I think it's been wonderful for this space that there is a fund that acquires the coins and the coins never leave. And this fund, as long as that fund is structured the way that it is, that'll be the way that it is.
Right, but they've already said they're unwinding that and they're going to convert it to an ETF.
Yeah, but until there is an ETF, there will be this GBTC fund, and it will continue to only have a one-way valve, Bitcoin in.
How much do you want to bet they're the ones that get the first regulatory approval? And they'll argue that if you don't give it to us first, it'll unwind GBTC, which will create an event.
Jungle, your response. Well, I don't have an argument against it. I just want to add, for myself, GBTC, I'd rather hold raw Bitcoin. It allows me to make an investment with some retirement funds easily. I know there's other ways you could do it, but right with my Charles Schwab simple IRA, I've been able to acquire some Bitcoins. I also know other people that just aren't comfortable using, any of these regular exchanges where they have to hold the crypto themselves. We know a lot of times that's the best way, but a lot of people won't do it. And so that has given people access to investing into this space. And I think that's what we're looking for, to expand, for more people to get ways they're comfortable, starting to dip their feet into this space.
Right on. Yeah, I'm a big fan. So, Jungle, we got you front and center here. We got Nick for another 8 minutes. Why don't you put the bull case, the pro for crypto? What's the pro case to invest in these digital assets?
Well, I think the main thing is just unmatched growth. I don't think you can get that growth with any other asset in the world. Now, of course, it's volatile. There's a lot of risk there. But I think the biggest thing people have to wrap their mind around is there real value, or are we all just involved in some Ponzi scheme and you want to get out before the next guy? And I think it just goes down to, are you solving a real problem here? And I think we are. Just from the simplest one we hear of all the time, of rapid money printing and storing of value, giving us a reasonable way to do it. That's kind of the antithesis problem crypto solves. But now we see with DeFi, real world problems of how do you earn yield on that value? There's not a lot of ways now to do that. So we see crypto that is really solving a real world problem out there. We're looking at, this network effect across crypto where we have more and more adoption and exponentially more and more value being built within these networks. And so I think it's a space that you just cannot afford to pass up, because time and time again, it's showing us this space is for real and it's going to continue growing. And I think everyone has to put something into this space.
Good call. Good call. Now, keep in mind, folks, every one of these opinions that we have are just sides of a story. They're not necessarily our personal agenda. I just want to make that clear, because we're going to have somebody that's got a shit ton of crypto is now going to present the bull case or the opposing view of why you shouldn't be getting into crypto. Go ahead, Nick, fire away.
So, Jungle kind of alluded to it, the whole idea that this is a Ponzi scheme. And, look at what happened over the last 3 or 4 months. I mean, 2021 has been the year of the Ponzi. Look at the meme coins. There's a token called Cum Rocket, for the love of God and all things unholy. So, we're in a space where most of the people, I think that they did a poll in England, 1 in 5 people that own crypto don't even know what they own. I don't mean they don't know what it does. I mean, they don't know what they own. They're like, I don't know. I'm not sure. I have to look. It's a bunch of letters, but they go up. And so I think you have an incredibly uneducated space with a bunch of bad information. There is zero reputation among the media in crypto. It's like 6 people that write articles when they're not working at Taco Bell. And the problem with that is you don't know what to believe and what not to believe. You can't believe CNBC, but at least there's somebody there, you would think, some editor. And so you can't trust the crypto media. You can't trust the real media. Most of the people that are in the space are here just to flip a buck. They don't give a shit about crypto, really. They don't care about anything. They don't care about changing the world, feeding people in sub-Saharan Africa, identity, medical records, student records. None of that matters. They're just like, I got to get a bigger pickup. And so I think that that's a very dangerous place. Also, you have regulators that also don't understand the space, that grew up before color television, that are going to come in and regulate the space as they are with this stupid infrastructure bill, which it's very clear. And now, again, it's $550 billion bill, only 6 or 28 billion of it's earmarked to be collected in crypto taxes. But it's so nebulous the way it's written that it looks like it's written by a 6th grader. And so the problem is a misunderstanding of the entire space. Only we have to endure all of this. It doesn't matter that they're wrong. If they pass legislation like this and it's continuous, and the Elizabeth, Warrens of the world are the ones that are laying down the law, we're going to be in a space where the law doesn't make any sense. No one knows whether they're breaking it or not. No one knows how to pay taxes. And by the way, which exchanges are they going to steal? Are you on Binance when CZ decides to pull the plug and steal all your stuff? Are you on FTX with Sam, chicken fried steak Bankman, and he decides that, okay, enough is enough. I'll give the money back to the Russian oligarchs that have supported this scam of an exchange, and I'm just going to disappear on some island. I mean, you don't know when. The only thing you can trust is Coinbase, and let's face it, Brian Armstrong's not like the greatest guy. You probably wouldn't let him drive your kids to school. So we're just in a space where everywhere you look, it's sketch. It's incredibly deceiving, deceptive. Everybody is out to get you. Gemini, those 2 dorks, you think they care about you? They want to find a place to sell their Ethereum and their Bitcoin when the time is right. They give 0 shits about this market. They don't care about inclusion. They don't care about making the world a better place. They have hundreds of thousands of Bitcoin and millions of Ethereum that they have to offload on a compliant Rube public. And that's the best in breed. And it gets worse if you go down the line. So I just think that the crypto space, everywhere you look, people are sketch. I don't trust anybody. You have illiquid exchanges with sketchy individuals that own them, with illiquid assets that get pumped on nascent markets. And if you look at DeFi, it's kind of just an amplified window of what the whole crypto space is. It's incredibly dubious. And I rest my case.
Wow. Well, what you saw me doing in the background, folks, was, yes, I'm putting in my sell orders.
He's selling everything.
I was thinking the same thing, man.
I'm out, dude. I don't think I can handle that kind of reality, that kind of truth. I think I'm going to go tune into some Bearable Bull. I need a pick me up. No, well, Nick, thank you for that. Thank you.
You're welcome. I've got to leave. Jungle, I would love to do this again. As always, Jerry, thank you so much. I love you guys. I had a prior commitment, so I have to run across town and help somebody move a dead body. It's no big deal, really.
Yeah, it's one of the old EOS founders. We'll see you, Nick.
Thanks, guys.
Thank you, Nick.
All right. Got you all to myself, Jungle. So one of the things I've been moving all over this house trying to get reception, and I think I got it now. I think we're okay. You look this now. This is the new Casa de Jungle. Yeah. And so the wife puts me out in the back 40 here, and I have repeaters for the Wi-Fi, all sorts of stuff, and it's still it's not picking up. So. Don't worry about the technical stuff. You're doing fine. Every time you've spoke, it's been great. Let me take a minute, though, to welcome the folks that are participating in the chat. There is a ton of people watching this, but some are actually chiming in. So I want to say hello to Ellie Poole. My buddy Danny is here. Bill Gould, a longtime regular. Tube the Pipeline, Rexman, Kelly Slade. We got Bit Avenue, DC Precise. We've got Patsy Green, one of my favorites. Hi, Patsy. Pete Kelly. And of course, no, I mean, if I didn't have a stream with Dash in it, something would be wrong. Belinda, nice to see you. Tyson, great to have you. Crawford, Fortune, nice to have you in the house tonight. Let's see. Is there anybody else chiming in? No. Okay, great. So one of the things that I'm going to do, so maybe I say we continue this kind of thinking, and you're the perfect guy for this, Jungle. We've known each other going on 2+ years now. And I can tell you that there are concerns that I have in this industry, right? One of the biggest concerns that I have, I fell in love with XRP when I got here. I've seen the market, had my eyes open the entire 3 years that I've been here. And one of the things that I've become very in tune to is that there are two things that people aren't talking about that are in the XRP army. It just kind of seems to be the same marching drum with the partners and the partners and the partners, and it's going to happen, and it's going to happen in the future, and it's going to happen in the future. The two biggest obstacles to, I think, big adoption for the XRP and commercial use case is the IRS tax treatment of all digital assets as property, not currency, and the fact that Ripple holds 50 billion of the supply. So they are no different than gold miners mining gold. If I'm a gold owner, gold miners are my enemy. They're producing more of the product, diluting my stash in my bag. I see Ripple, the company, the same way with their disbursement or sale of XRP, regardless of how measured it is. They are introducing supply into the marketplace, which diminishes the value of the supply that I have. Those two are my biggest points. You and I both love and hold XRP. How do you feel about those arguments that I have, or those warnings, or those not so bullish elements of that particular asset?
You know, it's something that you have to take serious. It is the one that I look at worse is the percentage of the supply that's owned by Ripple. And I feel it's going to turn a lot of big money on. I mean, we see that even in stocks sometimes. You know, that was a big knock on Tesla for the longest time, that too much concentration. There, of course, are risks with that. My feeling is they're not just going to give it away. They're not going to burn it. It's real value there. I think we need something further. I don't think this is a good system where we release $1 billion and you have this big headline every month. $1 billion has been released. And then, you know, they shove most of it back in, but it's just not good. They need something with further clarity. And I know David Schwartz has said in the past, they don't want to, you know, box themselves into a corner and maybe extend that escrow out. But I don't know what to say about it. I don't know the answer, Jerry. You know, I'm not the genius they are, but I think they need something. The escrow was a game changer when it originally came out. I think it gave people a lot more confidence, and you saw what happened to the price. I think it's something they got to solve. We have to have further development there in some manner. Again, I don't have the answer there, but something needs to be done, and I think you'll see a good reaction from the market if they can figure that out. And I'm glad you brought up the taxes. I hear you say that all the time, and I type back to you on this issue, so I'm glad we get to talk about it. So I agree, one of the biggest problems with digital assets is in the US, the way we treat everything. And anytime you want to use crypto, it is a taxable event. I think it will hold back adoption, and they need to do something there. And like you said, it's across cryptocurrencies. The one thing I keep going back to, and it's how Ripple can kind of work around stuff, I'm not sure when using on-demand liquidity. Now, I don't believe that's the best way long-term to use XRP for payments, but that's what they're rolling out now. The customer that's sending the payment, they don't have a taxable transaction. They sent $100. The person got however many yuan. It's a transaction. They could care less how it was done. Let's say MoneyGram, use them as an example, even though they're no longer using XRP. They bought it and in seconds sold it. Yeah, they got to aggregate those transactions, but when working properly, it has no tax effect, at least no more than currency fluctuations in their current Vostro accounts. So I'm not sure for that purpose with that system, which again, I don't think is the best long-term scenario. I'm not sure how the tax regime for on-demand liquidity use would matter much.
Well, let's dive into that just for a second. Whether you're an individual, a corporation, it really doesn't matter. The IRS isn't going to change its property status on the asset, right? So it doesn't matter if it's you or me, or if it's MoneyGram or Bank of America, or it doesn't matter. One of the points that got me so interested in XRP in the first place, when I was looking at the tokenomics of billion, you know, 100 billion supply, Ripple owning 50 being out in the wild ish, that I was thinking, okay, well, Ripple supply is going to be meant for commercial use, right? Hopefully. That the hope would be the SBIs of the world, et cetera, et cetera, et cetera, would gobble all of that supply up, and it would be held on balance sheets for all intents and purposes, right? It would be held within that company to be used. Now, for SBI, it's fine. CoinsPH, it's fine. Even Bitstamp, it's fine because they're in Europe. But any U.S. company, it isn't fine. If you're holding XRP on your balance sheet and it gets deployed, it doesn't matter if it's ODL or you build some kind of strike type, you know, wallet.
I see something here. Just
Please.
Briefly, I think your vision is what's going to happen. So your Bank of America, you're going to hold it, you're going to send it, and I think that is the best way to do it. But it doesn't work like that right now. If you're an on-demand liquidity customer, let's say Bank of America, you don't have any XRP. You are going to buy $100 worth of XRP on an exchange like Bitso, and you're going to sell that XRP on an exchange $100 worth, but in yuan. You bought $100 worth. 3 seconds later, you sold $100 worth. You have to report that. I bought XRP for 100 and I sold it for $100 worth of yuan, but you have no tax effect. You bought 100, you sold 100, and your customer was able to move that $100 at literally no cost.
Right.
ODL's a band-aid.
Okay, so let's say there's no financial immediate gain or loss. Let's say it's a break-even trade. There's still the accounting of it. If I'm a payment service provider, now I've got to have another army of accountants just handling the property exchanges, right? It's not like a cash.
I can't imagine it's anything more. I can't imagine it's anything more than just aggregating it through their system. I mean, they got to be able to track that.
Okay.
Where literally you click. I mean, it would have to be like for instance, if you have a billion Charles Schwab, I'm not going to sit there and say, well, you know, you sold 5 million things. I'm just going to, you know, attach a PDF of the thing and put one entry on there, and that's your yearly, you know, Charles Schwab stuff. So again, I don't know that. They don't let us see behind the scenes all of those details, maybe, but I can't imagine it would be much of anything. It has to be automated, and literally would be one line on the return. XRP annual sales, you know, 10 million. And we know it doesn't work like that in practice, though. That's the reality.
Right.
Is that's why you saw with MoneyGram, Ripple topping them off with all those fees. Again, it doesn't really work, and that's my secondary concern. People don't talk about enough. Is it's obviously not as easy as we thought it might be. Like, oh, you buy the XRP, you send it, and boom, boom, boom. We noticed with MoneyGram, you know, they're like $4 million in cost a quarter, and I assume that's in slippage, and that's one company. If you extrapolate that over all the companies, that's a significant cost. And so why is that? We assume it's just fine-tuning, building liquidity, but we don't know. So I think the complications of spooling up these corridors, maybe the switch to SME payments will somehow make it better. But we need someone to use the system, and not because Ripple's paying them money, but because it's the best way to do it and scale that and show the world this works. And I really think that's your biggest thing holding you back. Because to date, we haven't had anyone be able to. SBI is a publicly traded company. That new corridor they spooled up, if that sucker works, it's going to be on the reports. We'll see Katao up there saying, hey, we use ODL and it cut costs. We don't really have that yet. Real world application. Bitso claims it. I need to see it on someone like SBI's financial statement that it actually worked at some kind of scale. I'm not saying revolutionize the world to start with, Just show us that, like, for a quarter, you cut your costs and this is the system you're working. And I think it'll go a long ways, because again, we have not seen that yet.
Well, I'm hopeful. You know, obviously the size of my XRP bag is not what it was. You know, it's public knowledge that when the lawsuit was announced, I sold out everything. You know, and for good reason. I had been 2 years upside down in an investment that I firmly believed in, and I saw news that was only going to have downward pressure on the asset, and I went, I cannot stay poor. I can't stay a believer and stay poor. I had to make a business decision, not an emotional decision. And I'm glad that I did, because it freed up capital that allowed me to expand into other opportunities, which have done extremely well. And I did buy back into XRP when it, kind of stabilized down around 21.5 cents. So I'm very glad for that. One of the things that I've always enjoyed about your channel, Jungle, number one, you do great editorial. And I don't know if you script it out ahead of time and read it into the mic, or if that's coming off the cuff of what you feel. Excellent. You've done some stuff recently where you were talking about Flare networks and what you were thinking about actually for the first time in your X amount of years career in this. You're actually, sounds like you're going to get ready to dive into yield generation, yield farming, dabbling in these liquidity pool type mechanisms. What precipitated the extra jog down the risk curve?
I think seeing what we've seen happen with Ethereum, and it's not just earning your yield, but what you're earning those tokens, the growth that's possible, those systems are successful. I've dabbled a little bit with some of the stuff in Ethereum, but again, for the size of transactions I'm doing, it's just not cost effective. The cost of that, I don't even know what compound costs you now to do a transaction. It's got to be up there. But so thinking about systems that are scalable, that are cheap for someone who does transactions of my size. I'm going to be all over finance. It's the first application. I want to earn back those Flare Finance tokens. They have 3 of them. And I'll do the same for DOT once you start getting that opportunity, and also ADA. Again, it's another chance to earn some crypto early on. And so I'll kind of sprinkle it around and see what I can do. And again, I think it's just another opportunity.
I'm interested in it. And I'll tell you one of the reasons I'm interested in walking down that steeper risk curve is that it was an airdrop. It's, I had invested real money in XRP. I had a very large bag of XRP when the snapshot happened. So I'm going to get what I would consider a very large, healthy sum of the FLR token over the different distribution points. And to me, it's kind of like in poker, we call it a free roll. You know what I mean? It's like if you sat down at a poker table with your $200 and you amassed $5,000 and you picked up and went to the cage and cashed out and went back to the table and plucked down another $300. That's $300 of it's a free roll. You know what I mean? It was profit you just made. Absolutely. And it's just sitting there, and I'm willing to gamble a little bit more with that kind of money as opposed to my own bankroll, my own personal, this is what I blood, sweat, and tears created kind of thing. So when I looked at this, I'm looking to guys, folks like Erie, but really Mickey P. Fresh is just on this. He's like a dog with a bone into this Flare Finance space. I'm even considering joining his Patreon group just so that I can get some private counseling, because I want to set my stuff up right. And I don't want to get too crazy. Like, I'm not interested in Flare Finance per se, but Flare Networks, I'm cool. And I'll probably do the SLO Oracle thing. I'll probably even dabble some XRP/FLR in a particular liquidity pair, in a particular liquidity pool, and see how that goes. But I mean, I haven't been doing those things because they're so far out the risk curve for me. I can't afford to be poor. You know what I mean?
Yeah.
I don't have years of a career, blah, 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 blah.
Well, I'm approaching it the same way. I'm not going to be minting over all my XRP or any other asset, but I'm definitely want to take part with the FLR. I want to earn on that by, like you said, delegating your vote, and then you can see how far you want to take it. But, I'll move some crypto over to stake. And again, I'm really after those tokens early days, and let's see what they can grow to. And then, of course, your free FLR, what can that ultimately grow to over time? Like you said, it's a free roll. And I think when you look, if you get anything on day one, essentially, and it's successful, you're going to have some really good gains. Now, my only hesitation here is crypto is hot, so it's a little bit different of a marketplace. I don't know what that FLR will open up at, if it'll be high or low. We've kind of discussed that before. It's really hard to call. This is, can be a pretty crazy market. But like I said, for that reason, it's a free roll for me. I'll let it roll, try to earn with it, and I'm excited to see what they can build. And again, you try to use like a Uniswap, and it's an amazing technology, but it's just so expensive. Again, especially for someone like me that's not doing, some huge transaction. It's very cost prohibitive. So to get a system like that, I'm excited to have a DEX where we can trade different assets along with the staking component, of course.
Well, that's so, I think we've both just presented kind of a bull case for this quote unquote Flare networks. Let's take 1 second before we bring in our lady on the street, Bit Avenue, and present the con. Like, if you were going to sit down, let's say your wife had some airdrop coming, right? What would be the things, the risks you would make her aware of with this new network that's coming on that has a tremendous amount of community, like, I don't want to say promises, but positive energy going, oh, this is going to be so great. What would you say? Hey, how would you temper her expectations?
Well, I think exactly that. You just can't let your expectations get away from you. I hear a lot of people, and they say, well, Ethereum's very expensive and FLR is going to be cheap, therefore we'll win. And we know it doesn't work like that. I mean, we have to see these systems launch and work. You have to get people to develop on top of this, and then people to use those systems, not just, a few people that are enthusiasts. So, people that count it like the Ethereum killer and it's already there, look, we got a long ways. Let's just get the thing launched and let it work. And so I think from an investment problem right now is, again, we are in a very bullish time. I think Bitcoin just crossed over into 40,000. Even XRP, with as bad of a run as it had, it's higher than it's been. And so everything is really, when I look across the landscape, is kind of expensive. And so you might get some FLR tokens right now that are worth quite a bit. And I do want to ask you about that, if you think this will happen. But if we fall over a cliff, you might see that value that you could have cashed in erode. Again, a risk I'm willing to take because of what it can be, but a risk nonetheless. You have to know that when you get it, doesn't mean it's just going to go straight up from here. It can go down in a serious manner if the market goes a bad way, and you may not see it back for quite some time.
Right on. The only thing I would add to that is risk from a risk perspective, or like really kind of trying to understand the systemic risk, not just to the Flare networks. It's this whole space, right? It's this whole space. Folks, decentralized applications are working off of code. And if code isn't stress tested for every single potential whatever, you don't really understand or know the outcomes. I think it's really, really important that you put that in your head, because we've seen article after article after article of something on Binance Smart Chain having a rug pull, having a flash loan attack. We've seen this on the Ethereum network. Matter of fact, every smart contract platform that has launched DeFi stuff has had some liquidity drain from something that was not foreseen ahead of time, whether it be a flash loan attack, just a flat out rug pull, a backdoor, and the code was there by the developer, and he just went. And then you've got hackers whose job, these hackers go out and they hack to acquire gain. I just saw an article about a hacker who published his hack. and said, listen, this is how I hacked you, and this is why I hacked you. I mean, to me, and I'm doing this so that you guys will start to wise up. And I went, whoa, that was amazing. So regardless of the intentions, no matter how much integrity a human being can have and the team developing the code can have, until there is real battle testing in the real world over a period of time, be careful how much of your confidence, i.e. your value, you bestow upon them. That would be the cautionary tale, I would say, about any of these things. It doesn't matter if it's Flare or Sushi or Uni or 1inch. It doesn't matter. Be careful, because this is just a baby.
Yeah.
And we
very early days.
Yet. Very early days. So don't be in a hurry. Don't be in a hurry to get rich. Trust me, all you have to do to get rich in crypto is deploy some money into the right assets and then do nothing. Do nothing. Allow time and adoption and network effects to do the work for you. One thing that people don't talk about, Mike, Jungle, I want to get your thoughts on this. It's this, when I look back at the, let me bring in Bitta. Sorry, Bitta. I want you to be a part of this conversation also. When I look back at the tremendous growth of the internet, and I'm thinking to myself, what is the common denominator of the largest companies on the planet? It's that they were built on an open source permissionless network. We call it the internet, but Amazon calls it the place to make money. Alibaba calls it the place to make money. Facebook calls it the place to make money. But it's free, open source, and permissionless, just like these digital asset projects that we're in. Now, the new thing that we have here is, unlike the Amazon, the Facebooks, the Alibabas, etc., that have made fortunes on this open source network, only their equity holders made money, not us, the users. I didn't make any money off of Amazon. I didn't make any money off of Alibaba. I didn't make $1 for all those likes that I got on Facebook or Twitter. But in the digital asset space, when you own the token that governs the protocol, if there's an economic element of that token being used in the expansion or development of that protocol, you, the token holder, and the user are going to benefit, not just an equity holder. What do you guys think of that? Do you think I'm onto something with that thinking of building on open source, how all these different things contribute value to the next thing, even though there could be completely different people, completely different companies?
Well, I've heard actual Ethereum be discussed. It was talking about what you just said, where the internet was kind of like a funnel that funneled the value to Amazon and Facebook. And these networks, and the show I watched, it was actually Ethereum they were talking about, but they said that was like a net kind of that caught all that value within the protocol, which of course you own a portion of with your ownership of the asset. So I think it's definitely an interesting concept. This is really a chance that we didn't have before to own a piece of that infrastructure, and I think quite different than anything we've ever seen in our lifetimes.
Yeah.
Bitta, would you like to chime in?
Yeah, being able to, it's the same thing. Instead of, owning Amazon share or, Microsoft share, now you actually own part of the HTTP protocol, or as you can call it as an example. And now anything that's built on top of that protocol benefits you. So whether it's Amazon or, Microsoft or Apple or whoever uses it, you own the base of it. So you benefit on top of everything that they're building on it. So that's wonderful.
Yeah. I got, where my Jungle, where this all started? I remember David Schwartz in an early interview talking about the value that companies like Facebook and Twitter bring to each other, even though they're kind of rivals. They are competitors for marketing dollars, but they actually benefit each other. And every application that develops a community on this open source protocol is helping every other community or entity on that open source network. And they mean it's not intentional. It's just because we're all coming to the internet. We may go over here to Twitter. We may go over here to Facebook. We might go to see Jerry's YouTube channel because he's got some great guests on the show tonight. But the point is, we are going to that network and then dividing, attention. But everything being built on the internet is adding value to every other thing on the internet.
Right.
David Schwartz brought that up, and I was thinking, I really started applying that to my investment thesis. How do I express this belief in my investment thesis? Well, it became really simple and very clear. I started to diverge myself of all these kind of wonderful projects and just focus my investment dollars on layer one smart contract platforms. My heaviest investments are obviously Cardano, Ethereum, and DOT. And then I've got subsequent layer, second tier smart contract. I even got tier 3 smart contract protocols in my investment. And when you look at my portfolio, it's almost all smart contract platforms, with the exception of XRP, XDC, Quant, and Bitcoin. All the other 21 are smart contract platforms, because somebody is going to build an application on one of those smart contract platforms that's going to reach 1 billion people. I don't know who, but somebody's going to.
Well, and I think that's the ticket, the application that jumps out of this realm of enthusiasts. It just ends up on my phone, just like Uber or Instagram or something like that. And I'm doing something in my everyday life, but it's running on blockchain. And like you said, someone's going to get it. Probably a lot of someone's are going to get applications like that built. And that's when we'll really see this thing start steamrolling. I don't know what that first big application will be, but I think that's absolutely going to be the case.
Beta?
So I have a question as far as just generically, what Jungle, or even Jerry, what do you guys see might foresee go wrong? Like when it comes to, people always talk about crypto is such a new asset and very not set yet. So what, for somebody that is very worried or scared to invest in the asset class, what can possibly go wrong, that you guys can think of? Can it fully disappear? I know it's built on open source, but for somebody that doesn't quite know what that means, can it just go poof?
I think the biggest risk really isn't for the whole space, but is for individual projects. Something jumping up and biting you that you don't see coming, whether it's SEC popping the company Ripple with a lawsuit, whether it's some other project not being able to timely roll out their different applications and people get frustrated and go to another blockchain, whether it's even at the top with Bitcoin, if one of these others do get a heater application and they're able to bring a bunch of users into their network and really blow past Bitcoin, I could see that as a risk. So I think really your risk in this space comes down to focusing on individual investments, and then at specific times, I think be careful of when it's exciting. It's probably not the time to be going all in and YOLOing your whole life savings in. I think just being smart about it, looking for opportune moments, and making investments that you're willing to hold for some time, because it's pretty much impossible to call the day to day. But over time, premium cryptos are really going in one direction, and that's up and in a faster way than anything else.
Oh, I'll tell you, Bita, the only systemic risk that I see to this space has to do with on-ramps and off-ramps, right? How you take the currency that you earn by giving your time to an employer. He gives you money and you make decisions with that money. Some of it might be investment. Well, if the on-ramps and off-ramps to the digital asset world are cut off to you in your jurisdiction, that would be a major impediment to adoption and use, right? And the truth of the matter is we're not out of the woods on the regulatory front. Yes, there is a lot of big money. Yes, there are politicians who are personally invested in are waving the flag. But that doesn't mean we're out of the woods yet. We will not be out of the woods in the United States until Congress enacts a law that defines this asset class, and then it can be put to bed. Because right now, we've got companies that go to court. Well, courts are wonderful for establishing precedent on existing law or interpretation of law if it's migrated, morphed, mutated, or changed. But it doesn't make law. Courts do not make law. Lawmakers make law. They're called Congress and Senate in the United States. And in each state of the union, you've got your own House of Representatives and senators that do exactly the same thing on a state level. That's where law is made. And you can tell by everything we've seen, we do not have a unified Congress on the same level that we had with the internet back in the early 90s through the end of the Clinton administration. They created those lawmakers created and crafted their sandbox bill that allowed America to just explode with innovation. This particular climate with the House of Representatives and the Senate is not so forward thinking. And that's problematic until we get law created and put into bills that get signed, go all the way through the chain and get signed by the president. We're not out of the woods yet. And I think people need to understand that that's a systemic risk. Now, I hope it doesn't happen. I don't think it'll happen, but it's a risk. And if you're not aware of it, you should be. Or do you guys think I'm full of shit, or I mean, what?
No, what I was going to say is kind of until we get those laws here in the United States, I hear a lot of people, I just go back to that because it's what I focus on a lot, but with Ripple, they think this court case is going to solve all problems. I think until you get those applicable laws, Jerry, it's a game of survival. We just want to survive, make it to the next day, and be able to operate under this awful both tax and legal regime the best we can. But I really feel it's a game of survival until we do get that infrastructure rolled out from a legal standpoint. Because like you said, no one court case is going to solve this whole space, and it's not even going to solve all the issues for a single company or a single crypto. No way.
Thank you. I want to shout out, there are a few folks. I saw BZ Comedy Channel come in. Gary, nice to see you. YOLO, we got the YOLO Buck is here with us tonight. So like the entire YOLO Buck community is in the house tonight. Great to have you. Brady, if there are some questions that didn't get answered that you put up on the screen, please sift through, throw them up while Bitta and Jungle answer them, and then we'll get ready and prepare ourselves for our final thoughts and then close this down, let everybody go back to their lives. So Brady, if there's something that's on the screen that needs some question that I missed, please. Oh, Crypto Ice is in the house too. I forgot to mention Crypto. Hey, Isaac.
Hey.
And George.
I have a question.
Okay, go ahead, Bitta.
So I heard you when you were talking about XRP supply earlier that because of the escrow that Ripple has, that every time they release their escrow, that it might diminish the real value. However, if the use case is going up, do you think that the release of those escrow is going to diminish the value if the use case is getting, higher and higher?
Well,
it's simple supply and demand.
So if you got a use case where you're really pushing the demand up, maybe, but we see that's not the case in terms of they don't have the demand for that much, at least, because they're always stuffing most of it back in the escrow. So I think it's every single month this like really bad publicity. And I don't know the answer to that. In reality, if you stuff it back in there, it doesn't hit the market, but shouldn't affect the price. But we see the crypto crowd out there just seem to focus and dwell on that. And so I think, again, something needs to be done about that. I just don't know the answer. Because even if they don't release it, it's a risk, just the mere fact that they own all of that XRP. The fact that they could sell it all on the market very quickly, I think it's just too concentrated regardless. And so just the fact that's there, it's a risk.
Yeah. Okay. I'm trying to read what they are posting, so.
Yeah,
I don't know
it
if you have
take a
other
second too.
Okay. And then as far as, I guess, since you have a lot of real estate experience, I just have like a, as far as when we first kind of learn about real estate, some of the very basic comments that I hear that I've run into is, hey, they just want you to invest on real estate because then you pay a lot of taxes. That's kind of like a lot of the people that are not investors in the real estate, whether it's commercial or residential, that seems to be like the go-to comment when people don't understand like how that how you can build wealth through real estate works. So versus, oh, you know, it's better if you invest in stocks, versus now, of course, now we have a new asset class, which is crypto. So when it comes to taxes and real estate investing, how does that compare to crypto when it comes to taxes, and also stock when it comes to taxes, the benefits?
Do you mind if I jump in first, Jerry, just because your answer is going to be much better and intelligent than mine?
Stop it.
No, I mean, I'm serious. I personally like real estate from the fact of when I think of real estate, at least, I think about being able to leverage, being able to acquire real estate without having to plunk down 100% of the price. And then for the income flows off of it, the tax advantages based on the depreciation while you're holding that asset. Again, I don't think you're going to make as much appreciation as you would in the stock market or crypto. But again, that's very being able to run lines of credit off of it. And also, there's a reason why President Trump didn't want to show his tax returns. Generally, in real estate, you're going to have very low effective tax. I'm sorry, my attack dog here is going nuts.
Well, I'll tell you what I'll say, Bida. They're okay. I think this is an important statement. We haven't made it tonight, so I'll go ahead and make it tonight right now. If you're a human being who is earning money through either your efforts, right? You're giving your time to an employer, or you've been entrepreneurial and you started your own company, but you still need to dedicate your time to generate revenue for that company. If you're trading time for money in today's environment, if you're not taking some of that money and putting it into hard assets, real estate, stocks, good stocks, or the crypto industry, then you are just a hamster in a treadmill. You will constantly have your life cost you more and more and more, and you'll have no assets to help you get it. So that's number one. You no longer have a choice to not become an investor if you want to gain ground. If you're not scraping excess currency into a hard asset, you are losing ground. It is a recipe for serfdom. If you're out spending your currency units on what we call depreciating assets, I just bought a brand new gun. I just bought a brand new car. I just bought a brand new dress. I just bought this. I just bought that. Well, guess what? Consumers are going to be serfs unless you're using interest or profit to acquire those things. If you're using the money that you generated with your time to buy depreciating assets, you're gonna be poor or stay poor. And that's just the ugly truth. I'm sorry, folks. I feel horrible because we have an entire population that was never taught financial literacy, and you were taught to go out and make money so that you could buy the things that you want. And that worked great for the baby boomers. It's no longer a recipe to get ahead anymore. You have to invest in assets that appreciate greater than the cost of capital, which is the inflation or devaluation of your dollars. So that was my spiel. And I'm sorry, I probably should have saved that for my final thoughts. But to answer your question specifically, Bitta, there is no asset on the planet, with the exception of crypto, that doesn't have some carry cost to it, cost to own it. So if you own real estate, whether you do anything or not, you're going to pay a tax on it every year. Every year. Set your clock to it. If you own mutual funds, ETFs, or anything that is managed by a professional, you got managerial fees whether you profit or not. That's a cost to carry. That's constant. That's a constant drain. But if you own a digital asset and you have it in your Ledger Nano X, or even on an exchange for that matter, if you're willing to take the platform risk, there is no cost to carry. There is no cost to own your asset. Once you own it, it's yours. It's a bearer instrument. Take it anywhere you want, and it doesn't cost you anything because it's just electrons. There's no variable cost. There is no cost to carry. So over time, if one applies, we'll call it math, the best investment is the one that costs you nothing to hold, nothing to own, other than your original investment. Every other investment that has a carry cost has a drag, or in other words, it has a deficit that your appreciation or income, whether it be your rents or your dividends or your whatever, has to overcome. It has to overcome the anchor that's on it. Digital assets don't have an anchor. You put it in your nano, walk away. Cost you. So think about that. 6 months, probably not a big deal, right? 1 year of taxes on a property, not a big deal. Start thinking long term and start doing the math, and you will see cost of carry should be a consideration for every investment decision you make if you're a long-term investor. If you're just playing around, trading properties, fixing this house and selling it or whatever, totally different deal. But if you're going to hold something long-term, you should understand the cost to carry that thing, whether it's a stock, a bond, a piece of real estate, a bar of gold that you have to pay somebody to store in a safe because it's sitting in Switzerland, or your crypto that costs you absolutely nothing to store it indefinitely. Did I answer your question and 5 other questions you didn't even ask?
Yeah, you did.
Brady, get ready. I'm pulling you in, big guy. So this is a time of the night where I look at the clock and I go, wow, we've been rolling. And I love to give all our guests and my incredible producer, Brady, an opportunity for final thoughts. Bitta, do you care to dazzle us with your final thought for tonight's show? Because I know you were listening even before you came on.
Yes, my final thought for tonight is just keeping your eyes open. Every time you invest in a certain asset class, always keep the pros and cons, as you guys were talking about, in mind. And it's safe to kind of have a little bit of everything so that you feel a lot more safer than just having it only in one industry and then something goes wrong and you're kind of screwed. So yes, diversify.
Right on. Jungle.
I really enjoyed you having me on here. Again, can't talk about different asset classes at the same kind of high level that you guys do, of course. But to me, they're all a tool. They all can be used for different things, whether it's a dividend-paying stock or a piece of real estate that you're getting really low tax cash flows from, or some digital assets that absolutely can change your life because of the growth potential. I think just each of them have pros and cons, and I think if you understand those, I was listening to Nick Black today, and I know he loves crypto, but he's going through very real risks. I think that was a very valuable segment of the show. I think if you understand them fully, you can navigate your own capital where it will suit you best, because that answer is not going to be the same for everyone.
Brilliant. Well said. Brady.
All right. I think I strung together a coherent thought.
Yay.
Take it for what you will. Nick was getting me thinking with, his recommendation on the best thing or the best things to do. And it's basically my take on it is sit, wait, take profits consistently, and you'll do fine. Creating wealth is only a business as long as you treat it like one. So getting a gut check on your time horizon works as long as you learn something from it. And once that happens, you pivot and make your next step based on the tools you have available. And tools are either education or, I guess, anything you can get value of and acquire wherever it is you're working from. And I think that's most important for people to try and, I guess, broaden their cash flow options, because it's not just second jobs. It's, well, you own assets that pay you to own them. Well, so then you own as many as you can and collect more. So it's, everyone needs a gut check, and once you do it, you get it done. That's my story, and I'm sticking to it.
Well said, young man. Well said. I'll tell you, folks, I really enjoyed the guests that we had on tonight. Nick Black, thanks for showing up. Jungle, you're the best. Bitta, I just adore you to death. And, of course, Brady, for your constant support and the perspective that you bring towards the end of the show when you come on mic. I'll tell you, folks, if you're going to have a strong opinion of something, and I think it's absolutely brilliant that we've got so many people that are part of communities, right? Whether you're in the XRP army or, you're, a Bitcoin maximalist, or you're just somebody who's a crypto enthusiast and you support all this stuff, getting engaged and getting involved is super important. And being passionate about what you're doing is great, because the truth of the matter is the potential is phenomenal. But let's not get blinded by bias. The smart folks who have built beautiful careers having their money make money for them, let's call them professional investors, always look at the other side. You should know the bear case for every bull case of every investment you have. And I can guarantee you, because I'm a part of all these communities, we're not all doing that. And that's why I thought it is important to have that topic on tonight. So do yourself a favor. When you see something and it's negative or contrary to your position, take 1 second, be open-minded, look into it. Just because there's FUD out there doesn't mean that the FUD is true, but sometimes that FUD may lead you to an insight that saves you some money. And at the end of the day, the reason we're all doing this is to become better investors, which means we produce better outcomes with our investment capital. So thank you for tuning into the show. I have a treat for you guys coming up next week. I've got a scheduled interview with one of my favorite mentors, Raul Powell. We'll be interviewing him on August 5th, and I'll most likely get that out to you Wednesday, August 6th, and probably do a show about it. Oh, no, I got John Deaton next Friday. That's right. We got attorney at law John Deaton coming on next week. We're going to talk about the Ripple case. We're going to talk about financial literacy, and we're going to talk about how he thinks about his investment portfolio. So, folks, on behalf of Jungle Link, Bit Avenue, Brady, and, of course, who departed, Nick Black, Pura Vida.